Welcome to the latest episode of our podcast series for financial advisors. Today's episode is From Serving Entrepreneurs to Becoming One, a $2 billion UBS Breakaway story. It's a conversation with Ben Domingue, founder and managing partner of Family Office Partners. I'm Louis Diamond, and this is the Diamond Podcast for Financial Advisors.
At Diamond Consultants, we help elite advisors identify the right environment for their businesses to thrive, whether that's at a wirehouse, boutique, or independent firm. With nearly 3 decades of experience, we've guided thousands of advisors and represented more than $250 billion in assets transitioned. And each year, 1 in 4 advisors managing $1 billion or more who change firms are our clients. Our process is education-driven and based on building relationships, starting as your strategic partner well before you're even thinking of a move. To schedule a confidential conversation, call us at 908-879-1002. Wondering why advisors change firms and where they're headed? Are transition deals going up or down? Those very questions and more inspired us to create our annual Advisor Transition Report. It's the award-winning, data-driven resource designed for advisors that connects the dots between the motivations around movement and the firm's appetite for top talent. Arm yourself with the knowledge you need to make smart decisions. Download your copy at diamond-consultants.com/transition report.
There's a difference between advising business owners and actually being one. A lot of advisors build incredible businesses inside large firms. They serve entrepreneurs, help them navigate liquidity events, capital decisions, growth strategy, but they're still operating within someone else's structure, someone else's constraints. At a certain point, that gap becomes harder to ignore. For Ben Domingue, it became the defining question. After more than 2 decades at UBS Private Wealth Management, where he built a $2 billion ultra-high net worth practice, he found himself increasingly aware of the tension between what he was advising clients to do and what he actually could execute within the confines of a large firm. Because when you spend your career working with entrepreneurs, you start to see the difference, not just in outcomes, but in control, flexibility, and the ability to act in real time. And eventually, that perspective changes how you see your own business. So Ben made the decision to leave and build Family Office Partners with support from Elevation Point, not to replicate what he had, but to design something different. A business where he can control how advice is delivered, how solutions are sourced, and how the firm evolves over time. Where getting bigger wasn't about scale for its own sake, but about building the capabilities his clients actually need. And maybe most importantly, where he could start eating his own home cooking, making the same kinds of decisions his entrepreneurial clients had to make for years. In this conversation, we get into what that shift really looks like, why he chose Elevation Point to partner with, what changes when you move from producer to owner, where the wirehouse model works and where it breaks down for entrepreneurial clients, how that perspective reshapes not just the business, but the way you serve, and much more. So let's dive in. Ben, thanks for joining us today.
Good to be here. Feel like it's been a long time coming.
I was going to say the same thing. We've known each other for a while. Obviously, we worked together on your big transition, which we'll talk about. And I've always enjoyed just hearing your perspectives. And I think they're always very refreshing. Not to put too much pressure on you for the rest of the interview, but this should be a good one.
It's all good. We'll do our best. Happy to dive in.
Let's start from the beginning. Can you briefly share some of your background and what pulled you into the world of wealth management to begin with?
My background's easy because I was studying for my 7 before my 21st birthday. So this is all I've ever done. I had a sales job during the day, business school at night. Found this by chance, jumped right in, had a veteran use a bullet to get me in early at Ed Jones, and the rest is history.
So you started at Ed Jones. Wouldn't have expected that, to be honest with you, given the trajectory of the business and the types of clients you work with. So can you talk about joining Jones? I know they have a very unique and differentiated, but also highly effective training program. So can you talk about getting your start there?
Very effective training program, especially for someone at the time that was as young as I was. You learn how to be productive, stay on the phone, stay in front of people, stay focused on the core business, which at the time is growing the business. And truthfully, today, still use some of the strategies and practices and discipline of morning calls and staying productive here 25 plus years later in business. I still think about some of the trainers like Tom Bartow that we worked with, and is actually interested coming to the wirehouse because watching so many trainees come in, and quite frankly, that zero for keeping them, it was really clear how effective that discipline of being on the phone and being in front of people were back then, and would probably benefit a lot of big firms today, honestly, using that culture of contacts. So very thankful for my career early there.
Absolutely. The popular wisdom would say like the wirehouses have the best and the biggest training programs. But I think to your point, the success to failure rate is not great, but we see so many amazing advisors start off at Ed Jones. I think part of it is they're a recruiting machine and they're not looking to recruit necessarily folks with big bucks. It's more career changers, new entrants into the industry, et cetera. And clearly in your case, it was the right initial ingredients to get you started. I got to ask though, did you do door knocking?
Absolutely. 9:30 in the morning is when I knocked my first door, and I probably left the house at 7. I rode around the block 2.5 times, scared to death, probably for 2.5 hours, scared to death. Knocked my first door, and the rest was history. I had a great mentor, Patrick Burke at the time, and he pushed the right recipe into this 20-year-old kid, and it worked.
Perfect. You spent more than 20 years at UBS building over the $2 billion, mostly ultra high net worth practice. Can you walk us through at your peak at UBS, so before the transition, what did the practice look like as far as assets, types of clients, the makeup of the team, anything else just to give us a little bit of perspective?
Yeah, we had 12-person team, right around 2 billion in assets. About 25% of that was institutional 401k type business. Maybe 25, 30% of that was what I consider to be affluent, and the rest was ultra high net worth business. And so obviously our whole team moved. Now we sit at 15 and growing, and we're dialed into the ultra high net worth space. We actually left a lot of our institutional business behind. It wasn't something we really wanted to focus in on, frankly. We're in a good spot. We're nimble, we're multiplying, we're growing, and we were definitely excited on where we are and where we're going.
Can I ask you about just the decision and even just like the emotional side of leaving the institutional business behind? Like we hear from a lot of advisors who are very reluctant to leave because they're going to lose trails on annuities or on private equity, or they have a large client that isn't going to move. And I think just the concept of jumping off the cliff into the deep end and obviously taking a risk, but also knowingly leaving behind probably a pretty decent amount of revenue. How did you think about that? Or how would you advise others in a similar situation to weigh something of the sort?
At the warehouse world, you're so wired to all of these predetermined statistics that matter, whether it's or the net new and all the other factors that sort of dictate what others define as success. You get into the business world, entrepreneurs do not think like that at all. They're wired for, what is my EBITDA? Obviously, that's a big, and cash flow. What am I trying to build? Where am I going? What does the platform need to look like so I can go and do what it is that I'm setting out to do, and what roadblocks might exist? And in our case, for example, on the institutional side, that business has gotten obviously more regulated. So the requirements of reporting and so forth is much more onerous. The revenue is relative to labor output is absolutely horrendous. So as an entrepreneur, it's not a business that, from our perspective, given our capability and specialty, it did not make any sense for us to pursue. And the same goes for certain types of clients and certain types of work. We felt very comfortable with our cost structure, knowing what it would look like day one, and really just looked at it as a business decision because, again, we didn't have any particular corporate metric that we were trying to get to. We weren't going to another warehouse, so we weren't trying to hit what I would define as short-term hurdles that certainly can lead to cash, but all of a sudden you're left with the same hodgepodge you had before, and it's really difficult to form a business plan around that. We can get into our business model later, but I felt like I knew exactly what we needed to do and how we needed to execute that. And I just didn't want any hurdles in our way. And I think where we are right now, the recipe is working.
Yeah, it's almost like the difference between being a producer who's just trying to generate as much revenue, in your case, gather as much assets as possible, versus the mindset of being a business person or an enterprise builder or a businessman. That lens, my guess is, has served you very well and probably took a little bit of getting used to as you waded into the independent world. Is that an accurate way to say it?
Yes. One thing I'll just tell you, working in a captive environment, moving on to entrepreneurship, just something about us. All of my time is spent with family-style private companies. That's my day-to-day. And some have become my closest friends. So if you could think about the culture of what comes to mind is like a New York firefighter or police officer, where the great-grandfather was a firefighter, the grandfather was, all the kids were, the brothers, and all of a sudden one is a CPA. And it's like, who's this oddball? So all the conversation never really is centered around numbers. It's centered around whatever firefighters talk about as a family. And I felt that way as a W-2 employee because all my friends are entrepreneurs. All our clients are entrepreneurs. And so every day we're always talking about EBITDA, acquisitions, employees, lending. It's constantly filled with entrepreneurial talk. And here I was sitting as a W-2 employee. If anything, towards the later years of our career at a bigger firm as a W-2, no matter where we were, as a W-2, it was odd not having the control, being able to make quick decisions, make investments, acquire in the right way. It's very odd. So frankly, stepping into this world almost day one felt like, now I'm a firefighter.
I love that. That's a great analogy. When we'll spend more time talking about what you do in exit planning, how it's changed, et cetera. But before that, let's just, again, for a little bit more context, what ultimately led you to walk away from a remarkable business at UBS that was thriving and growing to launch your firm, Family Office Partners? You hit on some of it, but how about some more of the frustrations or pain points or more of the specifics around your decision-making to leave?
Yep. Happy to get into that. I've been asked that so many times and have probably answered it 5 or 6, 7 ways. But ahead of this, I knew this would be an important question that you wanted to get to. So I thought about it, about what really was what I would define as, if I were rating my thinking, I would say the most critical. One, we realized that we had to get bigger. So when we were executing on behalf of larger families, as an example, who might need a private bank to finance something substantial, which is a real life example. In our case, we might have spent the better part of 2 or 3 years just getting to that dance with the family, getting to a point of trust where they say, here's something we need help with. Can you help us? And so you turn around with that mission and you have one bank in your toolkit. So it's either going to be a yes or it's going to be a no. It's either going to be a fit or it's not going to be a fit. And you don't want to say no to this client. And so you realize, geez, I'm as big or small as the yes or the no. And just as a person who has spent 15 years, 20 years building the trust of ultra high net worth families, you want to pick your client and you always want to be able to say yes. And you can't do that under a construct of a single institution. You have to be okay with no's and yeses. So therefore you have to develop a mindset of, how do I find the fit? Because who wants to spend 3 years of their life, time and money, trying to land a large client only to find out they are not a fit for who you represent? That's not fun, by the way. I've been there. And so you realize, okay, that's not a good business model, because there's a couple of situations that didn't work out and you're like, this isn't cool. So what do? You have 2 options. You either got to get bigger, meaning you got to expand how many institutions you can get to with these opportunities, or you have to try to find the right boxes that the institution you represent fits in, and then try to go match that with prospects and clients around, hoping, by the way, that those boxes don't move, which, newsflash, those boxes move. And so it's not a very good repeatable business strategy to try to repeat the same type of client that fits a single institution.
Yeah. Yeah.
So
I mean,
that was a big aha moment over time. And secondarily, control over execution was a big thing for me. I watched my clients and some very close friends make decisions, switch vendors, make investment, just make quick decisions, scale companies from 20 million to 50 million to 100 million. And you look at your decision tree and it's a lot of employees that you're relying on to make the decision you need to do to make for what you need to do. And when those employees don't align with what you need, you have a problem that you can't control. Now we have control over all of our execution channels, all of them. You think about it, even our RIA provider we are a client, right? They're a choice. It's a contract that we have that we can change. So now all the control is on our side now. And I knew we needed to get to that point to where we could make the same decisions we watched entrepreneurs make day in and day out for the better part of 15 years dealing with them.
Yeah, I love that. I got to ask you though, from a selfish point of view, I was after you for a while. We had a lot of conversations over a couple year period. And I think that this vision, in my view at least, was always there. But it took something or some things to really push you toward executing on it. If you're comfortable, do you mind sharing what kind of was the straw that broke the camel's back, or what really tilted you toward, let's do this, let's go build, and let's leave UBS?
There was a large learning curve on what we wanted to do and was it possible, right? Because we did not understand the connectivity behind the scenes in a lot of ways, from asset management to technology, HR. There was just a large learning curve that we needed to go through, which frankly, so much of our conversation is what helped me through it, understanding a lot of nuances. And then of course, finding our way to not just Elevation Point, but a couple of others that we spoke at length with. We just learned so much. And that's when our vision became so clear that it could actually be a reality. So it's a learning curve of how does CRM work? How do you make this reappear on your computer when you're no longer relying on an employer to do that? How does that happen? So learning how that happens, learning how money management and execution of that works, that learning curve, as it started to become possible, for lack of a better phrase, our juices started flowing and there was just no stopping the momentum. Once we saw that, yes, we can go do this, it was over in terms of what we knew we needed to go do and wanted to go do, frankly.
Yeah, I vividly remember that. Yeah, it almost sounds like knowledge is power. And with probably most busy advisors, like making time to really understand and dig in is a decision, right? You're taking time away from something else. But usually what happens for folks that ultimately break away and go down the path that you did is you can't see what you've just seen. And it may not be the best timing, but you kind of know in your heart that once you know there's a better way, it's proved out to you to overcome the objections you had that clients might have, et cetera. Then it's a matter of timing and who are going to be our partners to execute on it.
We thought that it was not as different as we've learned it is in a good way. Initially, you start to convince yourself that it's really all the same. It's so easy to fall into that trap. And I think for some, based on the business, it's true. Executing for ultra high net worth families, especially a lot of private company business, from lending to M&A deals, transaction advisory, all those things, it's just apples and oranges.
Amazing. And for a long time, you held the belief, because I know you well enough, that if you didn't hold this belief, you wouldn't have stayed for so long, that a large wirehouse platform, in your case, UBS, was essential to serving ultra high net worth families and business owners. Why do you think that assumption held for so long? And do you have any regrets for holding that belief for as long as you did?
It's a good question to unpack because truthfully, I don't know that we were necessarily convinced it was the place. It was just, we were growing. We were focused on this M&A space, transaction advisory space. And several years before where we started to contemplate all of this, I felt like we needed to get to a certain point where we could afford for our families, honestly, for things to go low to mid and we still be okay. And so even when we realized that, we put on the back burner and just said, we just need to grow and be at a better place, honestly. And there were other dynamics at play. So I don't know necessarily that we thought for so long it was the only way and then it changed. We just, once we realized this is really hard to get things done that we want to get done, we need to be in a place where we're really comfortable doing this and prepared to do this and really think through this. Look, we spent a lot of time investigating. This was the opposite of a quick decision. I'm sure there was a stone we missed, but it was small.
Absolutely. That's always the big thing is how much time do I have? Business is growing, especially with big teams. Like that dynamic tends to always be in play. Like you're growing 10, 15, 20% per year. You got this big client in the pipeline. The hard part is having the presence of mind and also just the strategic forethought to say, hey, I'm making a conscious decision to slow down growth for a period of time. Perhaps I won't be able to keep or land this prospect, but I'm doing this for the long term. I'm building for the long term. And me 3 years from now is not going to regret that I didn't grow 25% last year like I normally do.
Right. Our big moment, I gave you a high level of a situation, but there was a very specific situation where that cycle of prospecting, getting a client, and then trying to execute at the private bank level, that cycle actually happened. And folks keep asking about what at UBS related to, or prior firm related to the employee experience or FA or pay and all these things. Ours is 100% client driven. It was, you think about the time, I probably had 150 hours in prospecting this really large family. And to get to the dance of, geez, now we really have a large opportunity. And to have it fail is just a way too big a pill for me to swallow, knowing that under a different construct, I'm no longer limited to a single institution to go execute on behalf of that client, which we're 7 months in and have already proven that specific case out. So we knew that I was really regrouping, going, how do you chase the right client now? How would I have known that the solution was not a fit, which the solution was a fit until there was change and then it wasn't. So that made it even tougher. That was my aha moment. We're realizing that if I'm going to grow in this space and go after these types of people, again, I either have to solve for how do you get out of a large firm what is their ideal client that fits, or stay away from folks that we know may not be the right fit. And that was not an option.
There's like a certain like lending need that was required that UBS just wasn't comfortable with. And feel free to say no comment if it's too private or you don't want to talk about this topic.
It's not too private because business is business. These big firms, I would say this in defense of all these big firms. I will say this, moving has given me a new respect for what it takes to run a major firm, frankly, because you're trying to please so many people. And a lot of times you end up with people squeezed in the middle of trying to please the downstream and the upstream crowd. And it's really difficult. But the truth of the matter is, when strategy changes, it's not a matter of we'll never, ever be able to provide the solution. It's today we can provide the solution. 6 months, we're not providing the solution. 6 months later, we actually are back providing the solution. That is impossible to run a business on. You can't do it. I know why it happens. I understand things change, mergers happen, management changes. I totally understand why it happens. You just can't set up a business below it and scale it if you're needing those types of resources.
When you transitioned, I noted it was either like an Advisor Hub article about the move, or it was a press release maybe that your new firm put out. You get an awesome quote that I wanted to repeat and would love for you to unpack it a little bit. You said, "We didn't simply move from one destination to another. We set out to build our own." I think it's a powerful comment. And you've hit on some of this, but can you just unpack that comment a little bit more?
Yeah. So where that came from is, in our world, you always think about, if you're leaving where you are, where are you going? And that is the mindset that we had, I would say, in the first year or two of our thinking. Are we going to retire here? Or is there a better way to execute on behalf of clients? That was our constant question. But it was always, if we're not here, where are we going? And it wasn't until, quite frankly, that we started talking with Elevation Point, where the dynamic of the conversation is, what are you trying to do? What are you trying to build? What are your objectives and how can we help you do it? And that's when it hit me. I said, this is the first time I've had a conversation in this dynamic. Everyone else we spoke with would tell us how great they are, how great their platform is. And I'm going to tell you, we've looked at some great businesses. In fact, some good friends, I consider good friends, broke out of UBS, built a great business, New Edge, who spoke with them, and super impressed with what they've done. If we weren't independent thinking and aligned with certain things with Elevation Point, I'd tell every advisor to talk to them if they were thinking of doing this, because they have a lot of great things going on there. But again, it was clear it was someone else's decision tree along with everyone else. And we were frustrated at so many decision trees not being what we would have done, knowing what the need at the client level is. that we needed to control the decision tree. And so we knew exactly what we wanted to build. We knew exactly what our clients wanted us to build. And so in our mind, we were laser focused on what this destination should look like for us so we can control where we were going as opposed to going to where someone else built.
Yeah, that's powerful. There's like a light bulb moment or an aha moment. It's like you needed to see it in order for that line of thought or that thinking to be crystallized in a way that you could understand it and articulate it.
100%. And even now, Lewis, I'll get questions like, what is a multifamily office? We get this. And I'm happy to go into detail about that, but I tell everyone, we're defining what we define as a multifamily office. We know exactly what our clients want us to do for them, and we are executing to that deliverable. They all rhyme because all of them either come from or have private businesses, and they transact more than once and need the bill pay and bookkeeping and accounting. And I know what advice they need. I know what resources they need. I know what lending needs they have. We've just built a platform around what we know they wanted. And that's what their family office is going to be.
Love that. Yeah. It's who cares what the textbook definition is or how everyone else defines it. This is how we define it. And this is as a client, this is how you define it. And that's what matters.
Bingo.
I like that. You mentioned Elevation Point. Probably a good point in the interview just to talk a little bit more about them. We had Jim Dixon, who's the founder of Elevation Point, on a couple episodes ago. Don't want to assume everyone listens to every episode, though. Can you just share quickly in your own words, aside from the fact that they got you thinking in a different way, they're all about helping you build your business. What was it about Elevation Point that pulled you in? And how would you describe Elevation Point to someone who doesn't really know them as well?
Sure. Backing up with just understanding my background, which is in the deal world. I have no idea, but somewhere around 50 deals in with a range of types of deals, from ESOPs to sell side, some buy side, so forth. So I was very well versed on the type of buyers out there that acquire companies just in general, from financial buyers to strategics and family offices. And I know what owners who have long business plans, not a 5-year flip, I know what they appreciate of family office capital. So that aspect, which I understand for a lot of folks, they may not understand the value of that if they don't have experience in the institutional capital world. But I'm telling you, that is a huge component of our interest in continuing conversations at the time, because I knew their capital was sticky. And then the further investigating and understanding that not only is their capital sticky and long-winded, but it's financially based. So the investors come from a background of investing in these businesses. So if they understand them, they hold them for 20 years, that sounds like a hell of a partner for me. Because while there's no question we think about enterprise value, there's no question. And we're certainly building our share, but it's not from the standpoint of a roll up and flip. It's building a durable business with substantial earnings power and a brand that we hold for a really long time. And you have to understand that you go to a firm that's backed by 5-year capital, and the business plan you're hearing today in 2026 could be different in 2030. So if you have a 20-year time frame, you just need to understand that there's going to be a change of hands every 4 or 5 years. And it may be silent equity and it may be active equity. And we really like that alignment. It was very aligned with our thinking. And so then when you go below that and talk about Elevation Point as a minority acquirer and the way they've structured the deal, again, just coming from a very deep M&A background, I love the concept. I loved having a partner that could help accelerate our growth, but we still have the control, like legally, not just from the standpoint of you control your office kind of thing or a control culture. No, contractually, I control this business. And that was another really big factor in the deal. The deal was just a great fit, understanding M&A to the extent that we do. The deal fits with the way we think as advisors, not just Ben and Shauna, but the advisor mindset. I think if more really understood the advantage of that structure, I think you would either see more players come into that structure or you'd see more advisors come into that structure.
I think it's a great point because honestly, I would say 9 in 10 advisors and smart, savvy advisors that I'll speak to would say, if I'm going to go independent, there's no way I'm parting with any of my equity. I want to keep all the upside. I don't know what the future holds. I want full control. I noted in kind of the early days of working with you that you thought of it very differently, probably because of your M&A background, where you were more of like, I want someone to have a stake in me because they're going to have greater incentives to help me grow. So maybe you can elaborate on that point a little bit, just the thought of owning 80% or 75%, whatever the numbers were of this pie rather than 100% of the pie.
Yep. So there's a few things. One, it's a de-risking event when you move over and have some type of transaction. And keep in mind, for the better part of 10 years, I've preached exactly what we did to clients. Wealth is built in a series of transactions. And I'm not going to get on my soapbox about the exit planning term, because 4 out of 5 transactions are really not exits. Many owners don't even associate with that. Neither did I, but yet we transacted. And so the first transaction, it really should happen as soon as you possibly can as an entrepreneur, to de-risk, to just have some capital in your pocket that's not in the business, that you're no longer only living on the earnings of the business. So that's step one. Step two is on the transaction that's at market value, where you're not trying to hit the moon, you're not taking a flyer, but you're waiting for a good market value. The third one's the flyer. And so for us, this was our number one. So I just simply took my own advice and said, we've been good stewards of our money up to this point anyway. So this just takes us to the next step of stability and saying, you know what, now we have no fear. We can go grow this business without really worry. And I like that aspect. I'll be very honest about that. We like that aspect of a de-risk event. In addition, though, having a partner that is motivated to help us, we like the idea. It only is now 7, 8 months in, whatever we are, to really see the value. We're in our 3-year plan in month 7 right now, with acquisitions teed up, some of with your folks helping out on, and things that we have going. We thought 3 years, this is what was going to happen. It's happening in 7 months. So now we have real life experience over how we have used our partners to be of help. And even the investor group, who I've built a great relationship with, has poured resources and is making connections in cities we're looking at being in. It is working the way it's supposed to, is what I'll tell you, 7, 8 months in.
It's amazing. If you don't mind sharing, I remember it was probably a week after you transitioned, you told me that you, paraphrasing my words, not yours, you botched the initial way you're describing to some of your more sophisticated clients what this RIA independent model was like, and that you had another light bulb moment or realization, and then you had a new way to explain it. I won't ask you to share your secret sauce or anything like that.
No
But
problem.
would you be comfortable sharing with our listeners how do you think the best way to describe the concept or the construct of the RIA and what Family Office Partners was to your clients?
Yes, more than happy to do that. Happy to pass on any help to not only you and everyone else, because I certainly had my botch moments. And truthfully, it's important for everyone to understand a passion on sharing this aspect of our transition. It's not just that we could have done a better job, which would have benefited us, but quite frankly, we could have done a better job of helping a client understand how the business works. So you think about custody as its own business, and you have these big firms with custody departments. And when you come into our world, in this world now, you're just tapping into another custody provider. So that business is the same.
Yep.
And then you think about all the other, on the other side, the providers of technology and investments and planning tools. For a lot of firms, those are third-party providers anyway. You're tapping into third-party providers, so that doesn't change. The only thing that changes is the middle. You're replacing home office employees with an RIA contract. That's all you're doing. Everything else stays pretty much the same. So that concept was important and really helped clients understand. Secondarily, we stopped saying we're going independent. That was our biggest mistake. And here's why.
That's interesting.
It's when someone comes up to you and says, I'm a lawyer, or I'm an advisor, or I'm a whatever, you immediately associate what you know that to mean for yourself. So when I was really growing and would speak to FAs about how to be in a room and connect with owners, because I'd get this question forever, how do you get so many deals? And I would say the longer in a room I can go without using the noun as to what I do and just talk about what I'm working on, the more effective I can create what I was trying to for the prospect or client to understand exactly what we do before using the word wealth manager, private wealth guy, whatever, financial advisor. And it's the same thing with the client going independent, which is we kept that word away after the week 1 and just explain that we were moving their business to another custodian, another provider. And then we explained what getting bigger meant to our entrepreneur clients. So those two components, we're moving our business to another custodian. So that right there parallels one custodian with another. Because like it or not, it's true, right? Whether a big firm is integrated or not, their custodian business is in its own world. How money moves, where money's deposited, it's all the same kind of people. So when you go to another custodian, especially like we did at Goldman, you can't make the argument that there's this huge difference between the two custodian departments. Okay. They probably both worked at each other's firm. So we started there so the client would understand that where their money will actually sit is the same. And then explaining we needed to get bigger to our entrepreneur clients and being granular about what that means, not just a sales pitch, but explaining what that means and keeping the word independent out of the conversation. It changed everything in the conversation. So that's mission critical.
That's some pure gold, Ben. I think you're giving people the answers to the test because you're completely right. Like I'm just trying to walk in the shoes of one of your clients, right? They're not listening to our podcast and reading all this stuff. You're probably hearing this concept for the first time. And they hear independent. They're probably thinking solo, unresourced, small, unsophisticated. They're not thinking high end, family office, similar, better capabilities than what the team had at UBS, et cetera. I love that. And then also downplaying, but not in a negative way, the impact or what it means to change custodians. We're going from UBS, which is this well-respected global brand, to Goldman Sachs, which is an equivalent or in some cases better brand and has the same connotation for safe asset custody, cybersecurity, et cetera.
We leaned into the similarity because people that know me well, if I say something's different, it's different. And I'm going to explain why it's different. But if it's gray, if it's close, I'm just going to say the same because I never want to be the guy that's creating differentiation that doesn't exist. And so I was very clear with how safe their assets were and how safe their assets were going to be, and definitely explained in many cases it was a very parallel situation for them, and never really tried to use one firm against another and this one's better. And I think long term, it's just not probably the way I would go about it. So we didn't do that.
You're focusing on the positives, the benefits.
The additional services that we knew they would want us to provide was a big change. We were also very honest with some of the most basic challenges of having more control over the RA contract was a big deal. We sat out with our clients after the fact and explained what we were doing. Cause obviously when you let them know, it can be somewhat of a shock. We started with, we're just moving custodians, and that helped keep it kind of apples to apples in terms of their money and safety. But then as we'd speak with them after the fact and explain, look, we can't control the employees that are above us in all these other channels. When we had trouble, there's nothing we could do. We could complain to a manager 1 out of 5 times that helped. The other 4 or 5, there's really nothing anyone can do. Some of these people working from home, like we just had a lot of challenges that we had no control over. And I was very honest with them. I said, I need people that I can fire if they're not delivering for us, because that means we can't deliver for you. And I never had that ability. I couldn't fire people underneath me, much less people in the home office. Now, if you think about it, we are a client for every single person we are dealing with, including our RIA. We are a client of Elevation Point. We're an institutional client of Goldman Sachs now. So the dynamic is different from a structure standpoint. And I'm telling you, the level of service and the way our communication is with all of our providers, from our planning providers, the tech, the CRM, you feel like you are an important client. And they know that if they don't produce, we can change you now. It's not like we paid hundreds of millions of dollars to put Salesforce on our platform and it's unwindable. We can click a button and bring in Wealthbox or someone else. And so because they know that, the dynamic is very different. We feel people working for us that know that there is something on the line for not coming through. And that element has been lost in corporate America. I don't know where it went, but I'm telling you, it's lost. And this structure changes that, at least in our world.
Love that. You call your brand Family Office Partners. First off, I'm shocked that wasn't trademarked before because it's great. You pulled a rap out of your hat on that one. But like we talked about earlier, different advisors, different clients perceive or present a family office in different ways. I know I have my perception of what it is. Maybe it's right, maybe it's wrong. What are the services that your company is providing that, in your view, make it a family office? And follow up question, or kind of part two, is are you doing all of these services in house, or are you working with external experts? Like, how do you think about integration and owning or having these folks as employees versus just delivering capabilities that may exist outside of your four walls?
Sure. Happy to dive into that. First off, we are bolting on a lot of the standard capabilities that you would think about when you think about traditional multifamily office services. So you think about the wealth management side, which is the essentially investment in public and private securities and the planning that comes with that. And of course, insure advisory and stuff. And then you think, okay, what does it look like different now? A lot of clients want us to take on the bill pay and the bookkeeping and those sorts of services. And in our world, it's really easy to bolt that on even without taking on custody, because you have folks that do that we work directly with. Even take an equivalence, for example, that sends client reports directly to us, and we can then send them to the client, and the custody sits with equivalence. It doesn't sit with us. At the end of the day, clients want execution and one team to deal with. And it's so easy for us to bolt those things on. So you think of another thing. We are actually in the process of bringing on an attorney in-house. But to be clear, that attorney is not going to do all of our work. If I was a client, I would want the best of wherever it is, however I can get it. And I want a single source to go get it for me. So you think about the complexity of the legal work that we work with. We've got clients in multiple states. We're in the middle of a big transaction now, closing really soon. This is a real life example. It's a S Corp going through an F reorg just to transact with a private equity group. Super complex. I don't think that I could bring in a legal group inside of Family Office Partners that could achieve everything that client needs done. I just need someone on the ground that understands the legal side that can work with who we need to work with. So we did two things. One, bring that in-house. Two, have a retainer relationship with a law firm that we know really well, respect really well, that really is there to advise us on getting up to what we call considerations. Just helping us think through scenarios for the client that the client needs to think about. And they'll get on the phone with the client, sign disclosure saying, hey, look, they're paid by us. They're going to help you think through what you need to do. And then it's up to the client to either bring in their counsel to paper, or we go to we say, look, you can go to this firm separately, engage them separately, and they'll paper up the documents and do what they need to do. That's how we really address the legal side of things. Tax advisory, now you have multiple programs like Tax Status and Advice AI and Vanilla and those sorts of things that allow you to bring all that together from a technology standpoint. And it's really, think about it like this, Louis, it's the way you involve professionals. When they're traditionally involved, you're limited on the resources you provide. Now you're relying on a third party to provide, whether it's estate analysis and all the financial side of building that, right? Now we can do all of that in-house and working with the professionals, but we control all of that. Some of these big firms might tell you, look, we have planners in-house. Yes, they're covering 500 advisors, okay? You're lucky to get an email back. And when you do, the next meeting availability is 8 weeks out. And then the next meeting is 8 weeks out. So the capacity to move within the time frame we need to move, it's not workable. It's not possible. So we built that into our, what I would say, offering, and have executed on all of what I'm just talking about already with multiple clients. And everybody has been extremely happy that we can plug in some of those other resources now.
Honestly, I feel like the trend these days, especially with these mega cap RIAs and just the narrative in general, is you have to provide more services to clients for the same price in order to defend your fees. And we need to have in-house CPAs to do tax returns. We need in-house estate planners to advise on those matters. We need bill pay. We need all these different things. But honestly, what you're describing, the way you're breaking it down, to me, lands the point that our clients can work with better experts that aren't directly employed by our firm. It gives us flexibility if they're no longer the right fit, or they're too busy, or they're too slow to work with someone else. And at the end of the day, it's still accomplishing the same goal, which is You're still doing with your team. You're still vetting these individuals and you're still running things from point A to point B. To me, that should be, I think, a big takeaway for anyone listening is you don't have to go and build everything in house. You can create this family office type model or create a more holistic model just by having the right network and working with who you view for your clients are the best folks and not being so rigid in it.
100%. And then, of course, going back to earlier, you asked me about the private bank lending platform, right? So we had a live situation, very large loan that we've spoken to 4 institutions about it already. And we have 2 engaged. I think one will come through. So that's on top of the stuff, like I mentioned, more obvious stuff like tying in tax, tying in legal, tying in certain advisory that you could plug in that you can't plug in under another construct. But part of it is this, though. It's not just the fact that you're plugging it in. It's that you're controlling how it's plugged in. Because to be clear, some of these regional firms has figured out how to plug some of that in. But you just have to understand you were going off of the way they saw how to plug it in, how they believe you should be delivering tax planning, how they believe you should be delivering estate planning. So I think some of these regionals are guys that just want to plug and play and are okay with the deliverable. It works great because it's better than having nothing. Going back to what I said earlier, we wanted the control. I know as a client, again, we have a really big chunk coming in next week from a deal closing. And that's a real life example. We put all the resources that in some cases we had just plugged in to work on this. And the way we pulled in his professionals, our professionals, worked on the tax strategy, worked on the deal strategy, worked on the estate planning strategy, all aligned together. That is exactly the way it's supposed to work, the way I envision it to work, and the only way we want it to work.
Yeah. Best ideas win, right? Best X going for. Let's talk a little bit about, before we wrap, because I know it's important, and it's probably a big reason you decided to run your own company. The concept that I know I see and you see it. There's a lot of really great advisors who serve higher net worth, ultra high net worth clients that want access to everything you're talking about, the family office, the infrastructure, the leadership that you provide, et cetera. So they want the resources, but they may not want to run the operational side. They may buy into your vision, what you're saying, but the thought of creating it and being the next Ben is daunting for them. It's just not for them. How do you think about creating opportunities for advisors like this within your firm?
Sure. Happy to address that because we have that already in motion much quicker than we anticipated. So for one, my vision was a hub and spoke model, which means all of the professionals that we have pulled together already will plug into our offering need to be able to get physically on the ground to the client together with other teammates. So you think about the way larger firms exist, where maybe you have the planning group out of Chicago, and maybe you have a couple of M&A folks around, and maybe there's this third party offering out of New York, and that's how you plug in all the things. We were very, very deliberate in having everything plugged out of here, so we could meet within 3 hours and be wherever we need to be and work collectively and build culture within this hub and spoke model, where we can get tax and legal and all the folks we deal with and sort of what I call triangulate around a market. So you think about our investment bankers, you think about the CPAs, the lawyers we use, the lawyers that work for us, all are within that region. So we have 2 offices popping up within that triangulation model. So we're looking at, there's another spot in Louisiana, going to Houston, really excited about that. We have another location targeted with some folks we're talking to. And so now we have that hub and spoke. So when you ask me about that, one thing I always do, I've talked to a few advisors, but these in particular, we start getting into some of the very complex strategies related to owners exiting a company, whether you're talking about private annuity trust or the deferred sales trust that some of these folks are doing. And there's a lot of very complex strategies that details around an M&A transaction or a private investment that a private wealth kind of folks like us in 5 or 10 minutes can understand if an FA has had a lot of experience in that world or is hoping to get into that world. And that was one thing we set out is how do you replicate 3 or 4 of me that can get into a really complex situation without me always physically having to be there, but use the network that we've spent 15 years building around these 3 or 4 states and let other folks tap into that. So that's what we've focused on is guys who don't have an enterprise like us, but have a good team, a great business, clients that are just like ours and have the same type of level of expertise that want to tap into the family office model. So we believe we've found that a few times already, and I think it'll happen quicker than we anticipated. Our next move is, where's the next hub and spoke? How do you find another team, maybe similar to ours, that understands the brand and understands what we're trying to do and says, you know what, I want to be the next platform in Fort Lauderdale. And then we're going to buy somebody or pick up somebody in Tampa and somebody in Orlando and somebody in Miami and have another hub and spoke where we can all come together, get together, chase the right business and work collectively in a unit. So that's the vision. You brought up the name. As you can see, there's no Domingue or Prejean or Freyard on that. That was by design. I wanted a brand that everyone could look at and go, I could see myself associating with that and not be tied to me. You mentioned CEO. So we just hired a really seasoned COO that we were super excited about. She knows acronyms I didn't know existed, frankly. And the next move is to hire a CEO. That is not what I'm going to do. I know that's a different kind of path than a lot of advisors take, but by all means, I'll be the visionary and working. But my passion is working with professionals and talking with clients. I think that's where my strength is. And I think as things become very clear on where we're going, I think there are other folks out there that are more suited and designed to take this vision and run with it while we do the fun stuff, which is getting around, making connections and building the asset base and getting the clientele, solving real complex problems. That's what I love to do. So I think that also resonated with advisors we've spoken with already and a couple that have already bolted on. They understand that when I say we didn't make this brand to be about a single person, structurally, we were already putting our money where our mouth is. And they really like that.
Again, it's refreshing and different, right? Especially the concept that at this fairly early juncture, you're going to take the CEO hat on and invest in a fairly expensive role to find a CEO to run the business. That takes someone without much of an ego. And I think, it's eating your own home cooking and really proving out everything you believe. I think we could talk for another couple hours, but I know you're busy. Our listeners have other stuff to do. I think it's a good point to wrap. It was so helpful in a number of different ways. I think my two biggest takeaways was how you graciously described the light bulb moment for thinking about change and how you're working with business owners and how that really colored your thinking. But then also how you described the RIA construct, not saying the word independent, to your trusted clients when you move. So there's a lot here, Ben. I'm sure we'll do this again in a year or two when you're a $20 billion powerhouse.
Yeah, we're happy to do it anytime. The intel, and I'm not just saying this as an OG podcast, but truthfully, we were very insecure not knowing what lied beneath the surface of a different world. And just having what I felt like the combination of the People magazine and the Bloomberg magazine of our business was extremely helpful. And quite frankly, led to the confidence we had to do this. There's no chance everything that you know without a lot of hard work. So I much respect all the work you put in to be able to give folks like us the perspective that we really needed. And most importantly, the independent view. Every now and then we would shift gears on what we might be looking at doing. And you always just kind of listen and say, if you do that, this is what you'll experience. You didn't find a conclusion early and try to keep us on that point. And I sensed that. And that was a huge help to the way I think, to be able to collect thoughts and come to a conclusion. I'm glad you're doing this. I'm glad you're giving back and letting other folks get an inside scoop to folks like us to maybe help their path. So thank you.
Thank you, Ben. I appreciate you. This was not a paid promotion either. I appreciate it even more.
Anybody that knows me knows I don't do paid promotions. So we're good. It's real.
Thanks, Ben.
As a financial advisor, you hold yourself to the highest standards of integrity, honesty, and credibility. You are successful because you take your professional responsibilities seriously and are dedicated to your clients. But are you living your best business life? Are your goals aligned with your firm's, or could a better option exist? Should I Stay or Should I Go is a book written with you in mind. It's a self-guided journey that walks you through the key steps that we take with our advisor clients. This strategic thought process and roadmap to professional self-discovery is designed to help you ask the right questions and think critically and objectively, whether you're considering change or not. Learn how to get your copy at diamond-consultants.com/thebook.